18,577, so not bad, and it's clearly the small cap end of the market that continues to scale up in trade. But let's move right on. Gas stocks as well in the spotlight. Saudi Aramco has sharply cut prices of propane stocks, which could shift demand from gas to propane. This would hurt companies like GAIL, Gujarat Gas. Okay, we'll be taking it across to Somi to understand a little bit more. But in the meantime, we've got the management of JK Cement joining in to talk about the outlook on pricing, demand, and what the view is for the company. Ajay Kumar Saraogi is the Deputy Managing Director and CFO. Thank you so much for taking time out and joining in on ET Now. What is the outlook in terms of your on-ground demand at present as we're stepping into the monsoon season? How are you expecting it to shape up?
Yeah, so the demand is good at this point of time. And yes, there has been some hiccups because of unprecedented rains and weather conditions. So otherwise, we foresee that the demand in this fiscal should go around in double digits for 9 to 10%. And as far as our company is concerned, we expect our growth to be around 15%.
And is the volume growth, Mr. Saraogi, or this is the combined growth value plus volume that you're looking at?
Volume growth for our business.
Sure. Point taken. Could you also talk to us about how the pricing is really panning out? We understand that the industry managed to take a price hike in the month of May. April also saw a bit of an uptick, and there's further price hikes expected in June. Could you clarify and confirm that for us?
So as of now, there's no price increase. We have to see, the demand is good. We made that since there has been a cost pressure, there is a need for a price increase, but it will really depend how the market takes it.
Any sense in terms of how the pricing has really panned out in the last 3 to 6 months, and overall the number of cost increases that you've done or price increases that you have done, is it enough to pass on the pricing pressure of the raw materials that you talked about?
So if you see in the last fiscal, the cost increases have been far more than the cost increase has been far more than the price, and that has affected the margins. But now, though there's an effort, we have to see because a lot of capacities have also come in, and effort is there to pass on the cost increase. But at the same time, we are seeing some silver lining as there is some reduction in the fuel pricing. So we expect that at least some relief is there, but the industry definitely needs some price increase.
Right. Your EBITDA per ton in Q4 was about 750 rupees per ton. What is the outlook on a QOQ basis?
So now we expect the EBITDA to definitely improve going forward, and there should be some improvement in EBITDA in this quarter, and even when going forward, we should be able to achieve an EBITDA growth of closer to 1,000 rupees.
Per ton you're expecting in, let's say, Q1, Q2 itself, or towards the fag end of the year?
Towards the fag end of the year, not in Q1, Q2.
We understand that, of course, the company is looking at foraying into the paint segment as well. So could you talk to us about what's the update? When will we see the rollouts in a big way? When are you expecting the commissioning of the plants, etc.?
So, see, we have acquired a paint company. So now we are just increasing the reach of the paint. And the last year, this paint company does an annual turnover of about 90 crores, and this year we expect that we could be doing at least about close to 100% increase in the top line.
Okay, separately there is a lot of consolidation which really continues in the sector. Are you looking out and scouting for any acquisition opportunities, and if yes, which areas, which other companies?
No, at this point of time, no, we're not looking out for any opportunities.
Okay. Not looking out for any opportunities, but the debt continues to be a bit elevated around that 2,900 crore levels on a net basis. What's the trend expected to be when it comes to net debt going forward? Any debt reduction plans that you can highlight?
So, see, the net debt is there because we just completed an expansion, but I think this has peaked out. and going forward, it will reduce.
And sir, Mr. Saraogi, if I can get that clarification right, you said you're not looking for any opportunities, but there was a chatter that probably Sanghi Industries is one of the assets which is on the block and you would be interested. Could you confirm or deny?
No, actually, we are not looking at it.
Okay, so that's the take coming in. And okay, let's talk about the capacity expansion as well, because you did point out that there is a lot of supply which is going to come on board. For JK Cement itself, what's the capex plan? What are the capacity addition, whether it's happening in the grey cement? Is it happening in white cement?
So we have just, we have added about 6 million tons in this, in FY23. 4 million tons of greenfield capacity and 2 million tons of brownfield capacity. So now at the end of fiscal FY23, we are at 20 million plus capacity. We have 3.5 million tons greenfield grinding, which is on way, and out of which 1.5 million should get commissioned in this fiscal, and 2 million should get commissioned in the second half of FY25.
All right, thank you for taking time out and giving us some projections on your net debt levels as well as your financials. Moving on.